Overhead expenses. That's looking at the bottom section of what you'll see on your profit and loss statement. The definition for overhead expenses is actually quite interesting because it's defined as all the other expenses within your business after covering all your direct expenses. So your direct expenses being the ones that if you were to take any of them away, you couldn't deliver your product or service. For example, if you took away the people who built the product, if you took away the factory where the product is stored, if you took away the freight to either get it into your possession or get it to the client, overheads are all the expenses that are left over after those expenses have been allocated to direct costs. Overheads are often referred to as cost of doing business. These are the costs that you're sometimes stuck with, and other times they're investments that you make. Costs that you're stuck with, things like insurance, your motor vehicle expenses, computer expenses, the rent on your office, they're things that you have to live with and, as we said, are a cost of doing business. Then there's the other side of overheads where you want to optimize the return on investment for them. The first one that should spring to mind is your people that fall outside of direct. This can be your sales people, your marketing people, your finance people, your HR team members, and your general administration, which I don't really like to use that phrase, but let's say business support. They are all part of the overhead section of your business. It can also include advertising and marketing. It can also include consultants and staff training. All expenditure which is designed to help your business grow. These are all captured within your overheads. What should we be aiming for? Well, as a general rule, and understanding this is going to be a very broad type video, for most businesses, you want your overhead percentage at 20% or below. We find if you can be somewhere around 20%, you generally have a very efficient way of running your overheads. And that's a percentage of your revenue. If you had $200,000 worth of overheads for a month and $1 million worth of revenue, then you've got an overhead percentage of 20%. What's the best way to influence this number? The natural instinct is to cut the costs here as much as possible. But I strongly believe the key element is to save as much money as you can on the compliance side for things like insurance, for motor vehicle expenses. Try to minimize the expense for those as much as possible. And then for your people, your advertising and marketing, the consultants you might use or staff training you might receive, you want to optimize your return on investment on those to help you elevate the gross profit and revenue you generate as a business. All of a sudden, if you're optimizing your investments there and you're minimizing your costs in your other overheads, you can get that overhead percentage down without having to run a cost-cutting exercise.